Alrighty, so I'll talk about the trade I took first, and then I'll talk about the miss I took and the kind of the lessons from that miss. If my computer will load. So I took a short on EURUSD. I've been working on. I was committed to trading the London Open session on the M5 for about 6 weeks, and the trading itself was really good, but the mentality, like my mind game, like I couldn't sleep really. Like I just have issues going to bed late and then getting up early. That's just kind of how my biological clock runs. Like some people are like, yeah, if I go to bed at 3, then I'm getting up at like 10 or 11. Whereas me, I would get up at like 8, and it just it wasn't sustainable.
Mm-hmm.
A 1 hour chart. Put this on Thursday. Here we go. It was right in this crap here. It's actually a pretty easy and simple trade. And it was just on this 1 hour time frame right here. So this green zone that I have marked out here is just a daily busy, a daily fair value gap that I was eyeing before the week started, and I was looking for us to pull back into the zone.
So this daily fair value gap happened last week.
Let's check it out. I'll go on to the daily time frame. This one is from Friday, July.
A while
7th.
ago, actually. Yeah, a few weeks ago.
Right there, right? So reaccumulation. And then, I was just looking for us to pull back into that zone. And we have, in Asia, we have this set of highs here. Price breaks the high, comes down, creates a high probability order block. And then I was just looking for price to take out the previous day's low for a very simple trade because we were already trading into essentially an area of support. So I ended up lowering my risk down to honestly just 0.25% because this was my first trade in a long time that I've taken as a swing basis where I set it before I went to bed and then I woke up and it was already over type beat.
Mm-hmm.
So I'm trying to get more into swing trading and just being comfortable with just setting the trade and then just letting it go.
Mm-hmm.
And I can show, got my markups. And I took this on my little prop challenge account just to get it kind of started. Trade journal. So this was the setup before, I was anticipating a break of the Asian range low, which kind of was a part of my London Open trading strategy.
Mm-hmm.
But I was just looking for a break of the Asian range low and then price to come back up into the order block, high probability order block, and then push lower. And that's just what we did. And then this big candle that would have wicked me out if I hadn't just taken profits right there at previous day's low was a part of the GBP news release at 7 a.m. And that was the whole trade. It was just a 2R banger, and that was about it. And then the big miss I took because I was still working on just kind of feeling my way through the market and seeing what it was that I was looking for was the reversal coming in with an FP. So you can see this is on the 4 hour time frame, and essentially what I'm seeing is price pushing up and creating kind of a bullish engulfing with a little stop run at the lows. And so typically when I see this kind of behavior with the wick, we'll come back into the wick because it tends to be a lower time frame order block, and it's just a break above the highs, comes back into that wick / lower time frame order block, and then a push back above the relative equal highs. And then the WOP marked here is just the weekly open price. So I was just looking for a price to come back up, break those highs, and then use the weekly open price as support. And then this is my markup. We ended up just having a failure swing right though at the relative equal highs, but it literally delivered with NFP. This is the 1 hour time frame, so you can see that. So you can see the lower time frame order block that I was talking about is right here.
Yeah.
And then there's also this kind of idea that I've come up with. I call it candlestick divergence, where it's divergence between the actual candle bodies and the candle wicks. So on this one, it's candlestick divergence as the wicks come lower, and then when we come back to the level, the wicks are higher lows, but the bodies are lower lows. I just call that candlestick divergence. So it makes for a pretty powerful zone of like support. So that was just like the whole trade, but it was a really big miss because I had it set on my personal account, and then I ended up deleting it because I ended up placing like 3 trades on my personal account. I accounted for the risk and I sized down every single trade, but I think it was too much exposure on me mentally. So I was like, maybe not. So I ended up taking all the trades off, and then I was like, you know what? This is just going to allow me to at least get some insight into the following week. Because of this kind of like reversal in a downtrend with a Friday closing above like the Thursday's high. It typically indicates a big, strong reversal into the next week or potentially into the week after if this week tends to consolidate. And yeah, that was pretty much it.